Hanneke, thank you so much for joining us here at IMpower. It's lovely to see you again. And you have an awful lot of experience, 30 years in this industry. So what would you say about the current environment we're in with all that wealth of experience that you have?
So what I think is so interesting at the moment is that while change is a constant in our industry and sort of the one thing that against which our industry must adapt, I do believe there's even more change upon us than what we've seen, say, in the past decade and a half. We've come out of a period of low interest rates, quantitative easing, low inflation, and valuations in stock markets that were really underpinned by loose monetary policies. We're now entering, we've had some inflationary shocks, right? We've seen interest rates rise in the US, the UK, Europe, less so in APAC, but still some. There is possibly the chance of recession still in the US and Europe. We're not discounting that at this point. But what I would say is that while there's a lot of change, we do believe that we're actually entering a more normal environment again for investing. And when we're going to look back, when historians of stock markets or professors of economics are going to look back upon the last, say, 15 years since the GFC and what happened, I very much believe that they're going to consider that part an aberration and a type of environment we're not really going to see in the near future. So we're going to see that bonds might be more attractive because you can now earn a yield. And you're also going to see, we very much believe, valuations that are underpinned by growth fundamentals rather than by monetary policy.
So actually we might have a quite revealing period of where, sensible investing starts to pay off again and there's not the sort of easy money, as you put it. With that in mind and with the sort of high inflation, high interest environment we're in, what do you think it will be that will be key to making businesses relevant and profitable in what you've described as perhaps a new normal?
So asset management has been a fiercely competitive industry for some time, and that trend will continue. And we do believe that in the environment going forward, there will actually be greater opportunities for those in active management than we have perhaps seen over the past 15 years. There's a greater opportunity to really bring the skills of research and security analysis to bear to deliver high alpha and high performing portfolios. Notwithstanding that, there's also been a lot of pressure on margins because with falling asset values that we saw in 2022 for both bonds as well as equities, margins for the industry have dropped. They've been on a declining trend in any event, and so we must really turbocharge innovation. We must invest in technology. We must start to explore AI as well and what it can add to the investment process or indeed the customer experience. And we must also really invest in different investment type of solutions. I very much believe that the trend for and demand for customization is here. We've talked about that for some time, but the end investor is much more focused in this world of uncertainty, of certainty and outcome. That can be income, that can be absolute return, that can be a thematic type of investment aligned to their values. And as a result, we must adapt to that new environment.
It's really interesting hearing you say that, because in an environment like this where some might be actually very cautious because of the amount of sort of risk factors that are out there, you say actually you've just got to go head on and keep innovating and keep adapting and push forwards.
No, we must. And we see time and time again through various studies that the companies that continue to reinvest some of their profits, whether it's in asset management or in other sectors, long term are the winners. Not always an easy thing to do when there's pressure on margins, but I believe very much critical to driving success.
What sort of teams do you need to be able to have that sort of innovative approach?
So you need teams from very diverse backgrounds, and diversity in its truest sense. It's not just gender. I've been a champion of diversity by gender for a long time, since the founding of Level 20 and now having moved on to being chair of the 30% Club. But it's also about bringing people together from a different socioeconomic background. It's bringing people together that have a different ethnic background. I'm an EC sponsor at BNY Mellon for our LGBTQ colleagues. It's really about ensuring, it's as much as about diversity as inclusion, and ensuring that you bring all colleagues together to make what are quite frankly difficult decisions, be it business decisions or investment decisions. I have personally really benefited throughout my career from being part of diverse teams or leading teams that had great diversity in them. And yes, there are studies out there that prove the point, but I have very much seen firsthand that it leads to a much richer debate when all those voices are heard.
Listening to different voices is just good for the bottom line
at
the end of the day. And congratulations, you mentioned the sharing there of the 30% club. Tell me what that means to you to be doing that.
So it means a number of things. First of all, when I was approached for it, of course, the one question is, well, gee, we have actually achieved 30%. We're in fact at 40% in the UK of women holding board roles, and that is true for the US, and we've also surpassed the 30% in Ireland, Canada, Australia, and most recently Malaysia. So, of course, the first question is, what is there left to do? Well, there's actually still a lot left to do because we're not seeing enough women in executive roles. We're not seeing the 30% being achieved in all of our chapters around the world. We still only have 9 female CEOs in the FTSE 100 and 10 in the S&P 100, and I could go on and on and on. There isn't the appropriate level of diversity in the sort of the deeper layers of the organization, and that is something that I very much believe we must continue to focus on, shine a light on. And what the 30% Club really does is a campaign that engages with chairs and CEOs of companies in the UK but also around the world to shine a light on this and drive good outcomes. And I will say, while of course this means that 90% of those roles are held by men, and I've just been so impressed by the number of men that are advocates of this topic and who've been real mentors and sponsors of women in their own organizations and in other organizations as well.
This is a team effort after all.
It is a team sport, absolutely.
Just finally, with all that we talked about earlier on, what would you say you're going to be focused on mainly in the next 12 months, and where will all your energy be being put in terms of BNY?
So it always comes back to the clients. What do the clients need in this environment? How do we adapt? What are they asking of us? And then secondly, it's actually about our people. We have very much focused on creating a hybrid environment with the return to office. Most of our colleagues are in office 3 days a week and have the opportunity to be home-based 2 days of the week. We believe it very much gives them a lot of flexibility in their lives, and we actually believe it's very good for gender diversity, but we're all still feeling our way through this. It does change how you manage your teams. You need to be very focused on when you bring people together in the office, what the agenda and purpose is to make that meaningful. But I think it's very critical. It's also critical for the young people we're bringing on. So focus on clients and focus on our people in the next 12 months.
Thank you so much for joining us. Great to have you here at IMpower, Hanneke. Thank you.
Very good to see you again, Emma. Thank you.